Good morning, all. CamelbackTrading.org coming to this Thursday morning, March 16th. We are looking at Window Trader's market profile of the ES and the SPY. So yesterday's second heaviest volume of the year, 173 million shares. Fourth heaviest volumes of the year so far have been the last 4 days. So that's fantastic. We are in a 4-day balance. This will be the start of day 5. I think let's look at the important focal points, what we should look for prior to today's MGI being formed and our picture being painted. So first and foremost, to the downside will be basically value high and A's high. The market attempted to spike in J, but the next 3 time frames both got below it. We didn't stay below it and we closed higher, but it was breached all 3 times. It's still a focal point, though. Look at the overnight low. All right, we're certainly not going to ignore this level for a lot of reasons. Overnight low, value high, and where they're attempted to spike from. So first and foremost, that is the bull's line in the sand prior to getting more MGI. Any acceptance back inside yesterday's value, and you'll go trade at the 10-wide point of control. Okay? Well, let's rephrase that. The odds of trading back to the 10-wide point of control would be very, very good. So that's a huge area for the bulls to defend. On the flip side, yesterday's high isn't imperative for the bears to defend because it's not like it's in balance anyway, and it's not the top of the balance. Okay, our top of the balance is up here. So it's not imperative for the bears to defend it. Sure, they would like to. And then the overnight high. That's the big one for a couple of reasons. Number one, you're going to look right now, it's 75 minutes to go, but you'd be starting with higher value. Number two, if you go and get the overnight high, that'd be another feather in the bull's cap. And number three, at that point, the indices will be in the bull's favor. So early on, bulls need to defend A's high, this area. Bears want to defend this area. Everything in between will basically be chopped until more MGI is painted this morning. Plain and simple, okay? As far as the other ones, NQ, same thing basically, although most of their overnight is above yesterday's high. So we'll see if they gap. And their line in the sand from yesterday's E's high and value high for the bulls. And as far as the righty goes, now look at what righty did in the overnight. They filled the gap in the overnight. That does not count. And look where they are now. So righty still has the gap to deal with from yesterday. They attempted to get something going above A's high, but look how much deeper they came in. So A's high to me is really not a factor. It's value high from yesterday, as their overnight also has driven deep into yesterday's range where they had their 9-wide POC. And then just quickly on the chart, and I forgot to show you something yesterday about how you know long-term selling's in. But first, let me show you SPY. So it's a 4-day balance. Okay? Tuesday's high is the top of it. Monday's low is the bottom of it. The 200-day moving average is still about $4.50 above us right now. We're below the lower high trend line for the year. Again, if we come out of balance to the downside, we should go test December 22nd's balance low at some point. If we come out of balance to the upside, we'll take back this trend day or start taking back the trend day from the 9th and possibly go tack the 20-day moving average first and then possibly the 50 at some point. Now, I want to show you something on Schwab. You know, we talk in the room, who is our competition? It's very difficult to know when long-term money, especially is buying. But you can certainly know when it's selling. Now, when we had our heaviest volume of the day on that down day, I wasn't sure yet in SPY who was selling. But in the subsequent days when the market goes back up, then down, back up, that's not long-term money for the most part. Yes, it's in there, but it's not dictating. If they want to sell it, they'll sell it. Here's a perfect example for Charles Schwab. Okay? You look at some of their volumes, 6 million. This was a heavy one, right? Wow, look at that. 10.5 million. 7 million, even on this day down, 10 million. That's pretty good volume. Now look, they were in balance for a long period of time on a daily, came out of balance down, back to balance, down, inside day, look at that, and then boom, Now look at this volume. 40 million. 89 million. Remember, I was saying 7 and 10 million earlier. This day, 148 million. That's long-term money selling. Now, there's no doubt some other long-term money came in at these lows. Okay? There's no doubt about that. Maybe some of these funds finally, a lot of funds won out. A lot of different funds won in. They're like, okay, we almost cut this stock in half. Basically, they did cut it in half, right? What was the high up here? 86. And down here, they got down to 45. They got within $2 of literally cutting it in half. So you got some money to step in here. Okay? Then 2 days ago, they tried to rally a bit. Yesterday, it's still firmly balanced to me. Okay? But this is an example of when you know long-term money is in and you certainly don't want to stand away. How many people do you think when it got down to 64 said, you know what, we can't go much lower? Or maybe we're going to go test this level, 59.59, right? You had a double bottom around here. 50, look at this. You had a double bottom around 59.35, 59, around the 59 level. Well, that's a great spot to buy it. Well, guess what? If you bought it, you took $14 more of pain. This is a perfect example of knowing when long-term money is selling it. Anyway, good luck trading today. I'm leaving early today, around 3:15. So the video may be a little later tonight. Thanks for the likes and subscribing, and we'll recap later in the afternoon.